The morning report for the 9th of October 2009. There's been a lot of media lately about jobless claims and how much the unemployment has decreased by. We saw the headline news come out that unemployment dropped by 0.1%. When in the market we're expecting the unemployment to keep moving up. But however, is this the true facts or not? You've always got to be a little bit careful when things come out from headline news, and certainly have a look behind the scenes. Now, we've talked to our head economist in Brisbane, and what is interesting to note is that actual hours worked in September compared year on year had dropped by 2%. So although unemployment figures are improving, the hours worked by Australians is decreasing, which means less take-home pay, which means a lot of people probably gone from full-time work to part-time work or part-time to casual, the part-time hours being cut back. But what does this all mean for the marketplace, and certainly what does it mean for the individual? Well, for the individual, what we're looking at here is increasing interest rates, reduction in household income. That's going to put a little bit of a strain on the individual's household. What we should see is a reduction in retail spending, most likely a reduction in purchase of cars or homes, that type of thing, over the coming years as the individual households set about reducing their overall debt levels and getting their life back to some sort of normality. Now, for the marketplace, however, that's neither really here nor there. The big companies have already gone to restructure and cut costs. So it's a positive. It's a double-edged sword, unemployment. It's a positive for the big companies. The reduction in hours means that big companies are reducing their expenses. And this is a positive for our market, obviously a positive for retail stocks, a positive for material stocks. So overall, I think the marketplace is starting to steady out, and we are seeing some big gains in the last couple of days. What do we do as investors? Look, I think we look for the dips, we look for the stocks that are still cheap and haven't rallied off, and we get into those and we start investing that cash, chasing the good income, the good yields, and the growth that will come over time. Now, last night the Dow Jones was was up 0.6, S&P 500 up 0.7, the Nasdaq up 0.6, the FTSE gained almost 1%. Our market had a mammoth day yesterday, up 1.55% on the back of a good day on on Tuesday as well. Our market now sitting at 4,769. Now, my top value for this market at this point in time was 4,800. We're almost there, and we almost touched it again. Look, beyond that, we're looking at 5,400 for the market. I do think there'll still be a little bit of a pullback, but I don't think it'll be the pullback a great pullback. Maybe 5-10%. We might see the market drop before it heads higher. Now, the gold price continued to soar. It was up 1.1% to close at $1,056 an ounce last night. Now, this is a big move in the gold price, and still does indicate that people are a little bit hesitant on getting cash into the marketplace, and certainly looking for a bit of security in the precious metal. Physical sales of gold haven't risen as hard as the price has. Oil price is up 0.8%, certainly sitting at $71 a barrel at present, and the Aussie dollar continues to move up 1.6 last night, sitting at 90 US cents. Now, we expect to see the Aussie dollar move a little bit higher over the coming 12 months. Its price target's around 92 cents, but no doubt this will overshoot. For more information, go to our website at growyourwealth.com.au.